Sztanyo, Clanyo. Welcome in to Team Sztanyo Live. My name is Eric Sztanyo, and we're talking all things living in Cincinnati, Cincinnati real estate. Got a lot of fun things to cover tonight. Some very interesting headlines that I'm excited to talk about. As always, we'll get into your Q&A. Any questions you have about the Cincinnati area, living in here, relocating to the area, we'll jump into all that as well. I love getting to do that live with you guys. But I've got a quick question for you as I kind of set up tonight's headlines that we're going to talk about. So what if I told you that Cincinnati home values are expected to grow faster than the national average in the next year, that hundreds of new six-figure jobs are being added in Northern Kentucky, that Wall Street money is buying downtown office buildings at prices we haven't seen since the 1990s, and maybe the most fun one, that Skyline Chili is opening its largest restaurant ever right in the middle of Fountain Square in downtown Cincinnati. Would you say that Cincinnati is slowing down or that it is quietly setting up for its next run? Well, tonight we're going to dig into all of that. We're going to see what's going on in the city. How does that impact you as buyers? How does that impact you as sellers? You know, if you're thinking about a move to Cincinnati, or if you've got some real estate needs in Cincinnati, what is going on? What are the actual data? What are the actual numbers? I'm not going to try to overhype things. I'm not going to try to do anything, or any doom and gloom or anything like that around the headlines, but trying to take a look at the real data, the real deals, the investments that are happening right now, and explaining what that means to you. If you're thinking about a move here in 2026, or, if you're trying to understand where the market is heading going into 2026 so that you can make a smart, a wise real estate decision for yourself, for your family. So that is what we're going to get into all tonight. Glad that you can join us in here. Hopefully you can get in here live. If not, then, feel free to leave comments down below if you're watching this post the live show here. But I'm excited. I had a good week. Very interesting week. And my wife took our three youngest kids to Florida. They left on Saturday right before the snowstorm. And so I was on bachelor duty somewhat with my two oldest sons, 15 and 13. I was actually super excited for our time together. We snuck by on food. I grilled some burgers one night, which were a hit. Did some chicken thighs, a lot of popcorn, and eggs, like basic things. But I've got a list of movies that I've had on my Apple Notes for, 10 plus years now, called Movies for My Sons. And I've been waiting for my kids to get old enough where we can watch some of these, like, PG-13 / rated R movies. So we kicked off the weekend in the snowstorm with my wife and my three youngest kids away. And we put in Gladiator, and we had surround sound. The boys have not seen that. Now, on their 13th birthdays, I had them watch Braveheart. That was my first one, but that's really kind of the only one in this genre that they've seen. So we did Russell Crowe, Joaquin Phoenix, Gladiator. Awesome movie. I haven't watched it in years. That was awesome. We followed it up that night with not one, but two, and we went straight into The Matrix. 1999, Keanu Reeves with Neo, with, the red pill, blue pill. It was fantastic. So we had kind of a good time as just the men of the home here. Had a good week. Also, I'm really glad my wife is back. It's if you guys have ever been away from your wife for a while, it's nice to have her back. And we actually celebrated, today's December 18th, we celebrated our 20th year anniversary last night. We didn't do a whole lot we didn't have a special celebration yet because they flew in from the airport around 6 p.m. I picked them up and we went straight to a Christmas party in our church that we were having, and did, the white elephant thing and so all of that. So we haven't had our full celebration yet, but 20 years, the Sztanyo Clanyo, the OG Sztanyo Clanyo has made it. So very excited about that. Very thankful that my wife is home, and very thankful that we've been together. We've been together and built a life for 20 years. So let's get into the headlines, shall we? Some really interesting, news. And I'm going to share this first one because this is a story I feel like I need to tell kind of over and over again, which is that the Cincinnati real estate market is not like your national real estate market. Okay. We don't follow the national trends. We kind of do our own thing, and we're going to talk about it here and what this means. Cause this is more of a national type of story. We'll hit some of the bullet points here. Like 53% of US homes have lost value in the last year, the most since 2012. So what you're reading and what you might be feeling across the country, you'll find out here in just a few minutes, is not what we're necessarily experiencing here. So the housing market might be going strong, or it could be in a free fall. It all depends on where you live. This headline, the housing market's next era has arrived. Here's what it means for prices. So we're entering a new real estate market where prices, inventory, and sales levels are back to being highly localized, said the ERA real estate president. During the pandemic and soon after, we were able to make broad brush statements about dwindling supply, booming buyer interest, and increased prices. What he means about that is like across the country. It's like, hey, we've got all this demand and we've got no supply and we've got all this interest and prices are going up. But now that's not the same across the country. So recent data from Zillow Group underscored what is becoming a growing divide between housing markets, showing that 53% of homes in America lost value in the past year, the most since 2012. That is a pretty, not gonna lie, that is a pretty alarming number, I would say there. So that varies dramatically by region and city, though with homes in the South and the West, the most likely to have lost value over the year. Now, this is something I've been saying on the channel for years now, that a lot of that institutional money went into the South, went into the West, went into the Sunbelt. But what I say to a lot of people who are looking to relocate here is, you know what? Cincinnati's weather, we get the 4 seasons and it's great, but it's also just crappy enough that we didn't see a lot of that institutional investing, kind of during the pandemic boom. And so because of that, we're not part of these 53%, but let's get in here. The cities with the highest percentages of homes to have lost value are Denver. 90% of homes lost value in Denver. Austin, 89.5%. Sacramento, 87%. Phoenix, 86.9%. Dallas, 86.7%. San Antonio, 86%. Tampa, Orlando, San Francisco, and Jacksonville, Florida. That's a big chunk. That's a large percentage of homes who have lost money. So we'll keep getting into this, but Cincinnati, you will discover, is a very stable real estate market. We don't usually hit these swings like cities out west, like cities in the South, on the coasts. We're very stable when it comes to the real estate market. We will go up, and our prices have been going up, and our prices have been, I'll say this, the prices haven't been coming down. The growth of the prices have been coming down in the last year, but we kind of are like right in the middle. On a regional basis, cities in the Northeast and Midwest posted lower percentages. Connecticut just saw 12%. Milwaukee, Buffalo, Boston, Cleveland, New York, all in the teens and 20 or low 20s there. The factors that are driving the divide include some cities seeing an increase in inventory, in part because of new home development. But in many markets, home values have decreased as other costs have risen, such as homeowners insurance, as areas affected by hurricanes, flooding, wind, and fire have struggled to keep insurers issuing policies. So you've seen a lot of that in Florida. I've got some family down in Florida. I've talked to them about their insurance, and they're like, it is wild. And because of that, you've seen a lot of people where insurance has gone up so much, they try to sell the home. And then there's like a lot of other neighbors doing the same thing. So you've got all this competition from a seller standpoint, a lot of supply, less demand, prices go down. So we've seen quite a bit of that in Florida, in these different areas where these insurance issues are happening. There's a flip side to the Zillow data. While recent home buyers might be negatively impacted by the lower home values over the past 12 months, the median homeowner has seen their home's value rise about 67% since it was purchased. Just 4% of homes have lost value since they were last sold. So yeah, you're seeing a lot of homes go down across the country, but if you've held it for a few years, you're still in really good shape. So homeowners may feel rattled when they see their Zestimate drop. And it's more common in today's cooler market environment than in recent years, but relatively few are selling at a loss. Home values surged over the past 6 years, and the vast majority of homeowners still have significant equity. What we're seeing now is a normalization, not a crash. This is around the country. We're going to get into the Cincinnati stats here in just a minute. So regional distinctions exist on this front as well. In San Francisco, 14% of homes on the market are priced below their last sale price. In Austin, that number is 12%. Meanwhile, in the Midwest cities, such as Cincinnati, shout out, and Milwaukee, the share of homes on the market price below their last sale price was just 1%, according to Zillow's research. What does that tell you about our market here? We're at 1%. Around the country, it's more like 4%, 4.1. So we are 400 times better in terms of losing value. And that's, again, I'll say this over and over again. This is a stable, steady economy here in Cincinnati. We don't go too high. When, we grew a lot. Like, last week on the channel, I did how many zip codes are at a $400,000 or over median sale price. And that number was, I want to say it was 18 zip codes. And that number was 3 in 2019. So that number has gone up significantly. So we have grown. We just don't usually grow out of our skis. Does that make sense? Like, we don't grow so fast that when there is a churn, we go really negative. It's just stable. Now, if you're someone who's seeking appreciation, if you're seeking hot markets, especially if you're an investor and you're like, I want to try to ride a wave, right? I want to see where the population's heading. I want to see different trends, where different businesses might be heading. And I like to ride appreciation waves, ride it up, sell high, get out, do it again. Then I will say that Cincinnati is probably not for you. Like, this is typically not a city that rides big waves. We just don't. We're just kind of like chill waves. We're like river waves, okay? Right in the middle. That's kind of where our market is. So most communities have not seen a balanced market in several years. They're talking about inventory on that standpoint, but we also should expect home prices to have slight variation in appreciation levels next year, depending on the market. The stark differences among local markets compared to a national real estate outlook is like looking at a national weather forecast versus a local one. Yeah, it's real estate is local. Hopefully you guys know that. Say it again. Real estate is local. Real estate is local. But that weather metaphor, that's pretty helpful actually to think about from a mental image standpoint. There are some parts of the country, particularly in the Sunbelt, that have seen an increase of inventory as more and more companies return to in-office work. So that's interesting to me. You've got more. I think what they're saying there, as well as higher insurance costs for national disaster-prone areas. But I think that in office work returning means a lot of people may have moved to the South when they could take their job with them. Like, hey, I can take my laptop and go sit in the sun. Yes, I'm going to do that. And now that more and more companies are saying, no, we want you back in the office. Well, you're losing more and more of those remote jobs. So you're losing some of those, those people in that Sunbelt areas, causing decrease in demand. Supply goes up, prices come down. That's a potential factor that's weighing in here. According to Zillow's research, homes in Austin have seen the biggest decline in average value from their peak, sliding 20% in value. It's followed by New Orleans at 16%, San Francisco at 14.8%, Pittsburgh surprisingly down 13.2%. Nationally, the average value has declined 9.7% from its peak. And I'll tell you guys right now that we have not seen that here in Cincinnati. So we're seeing a lot of movements in markets, inventory is rising. Lower interest rates will help buyers. I want to talk about this for a minute. Lower interest rates will help buyers, right? If you're sitting on the sideline waiting for that. But new construction prices are set by fixed input costs and don't have the same pricing flexibility, which leads to a mixed picture in the year to come. While I see good activity coming for 2026 because of all the points above, the tariffs and increased costs for food, clothing, health, property insurance, etc., is taking buying power out of consumers. Liechtenstein said, still, that price drop is starting to make homes more affordable than other parts of the economy, which have seen huge spike in cost. And so I'll talk about this for a second here. Let me just wrap this up. More homes are expected to hit the market in 2026, but don't expect home prices to drop in the near future. A report by the NAR predicts existing home sales will jump by 14% in 2026. Not value, but the amount of home sales, okay? That's because a combination of dropping mortgage rates and improving market stability after several years. Prices, however, are projected to go up by 4% in 2026 as demand remains steady and supply remains lower than normal. So I know a lot of people I talk to are this, and this has been the case for years, particularly since the interest rates have gone up from the 3s, the 4s, the 5, 6, they went up and people are like, well, I'm going to sit it out. I'm going to wait for the interest rates to come down. Well, I understand that thinking from I'm losing my buying power because the rates have gone up. And so if they come down, I get more buying power. Yes. And the problem with that is when you have a prediction saying that you're going to have 14% more sales overall in 2026, because all these people have been, on the sidelines waiting for that buying power to strike. And then when everyone jumps back in, that's when things get really competitive again. Homes go into multiple offers again. Jumping quick again, because the problem fundamentally nationwide is you have a supply issue, and that's just can't fix it overnight. You can't fix it overnight. So builders are trying, but builder costs are up and land is more expensive, and there's just, and first time home buyers, it's hard to build a product that makes sense for them, which maybe we'll get into this tonight. I've been kicking around this idea around solving the affordability crisis, the housing affordability crisis. Maybe I'll save that for another one. Maybe I'll save that for next episode. I'm still kind of like, I watched a video this week on YouTube that had a headline for it. Here's how to solve the housing affordability crisis. And essentially the ideas were, if you cut down immigration was one idea, and clear out a lot of those people. This was, from one perspective. Then, you can increase supply. The other idea of that was you subsidize builders. And I was like, those are not good ideas. Like, I've got a better idea. So I've been kicking around an idea this week, and maybe I'll just tease it out, which would help the housing affordability. It would help childcare costs in a major way. It would help aging in place issues. It would help mental health and loneliness issues. It would help so many things. And maybe I'll just tease it out this time. But I think there's an idea where you don't have to spend government money trying to subsidize things, which I don't think usually ever works. I think there's a way that the market can fix this thing. However, it would, as I'm kicking them around with some people, like, it would take for it to gain traction, it would take a massive cultural shift, no question. And it's something that this video that I watched was actually railing against. I'll give it just another little hint here. Maybe you guys can figure it out and leave it in the chat if you know what I'm talking about. But in that video, he was saying, you see these families moving in, and there's 12 or 15 people in one house, and nobody wants that in their neighborhood. And I'm like, I actually think that's maybe could solve a lot of problems. So I'll talk about that later maybe in a further YouTube live, that idea. I'm still kind of baking it right now. It's half baked. Okay, so let's go into our next article, and let's look more specifically at what's happening here in Cincinnati. Okay. Next article. So that was a bit of a national scene on what's happening. Let's drill down a little bit more what's going to home values and what's expected here in 2026 with Cincinnati. So Cincinnati home values, here's the headline, expected to grow faster than the national average in 2026. I'm going to get into this as to why, but part of getting into that last story is, like, you have these areas around the country where you've got to move, and maybe it's still expensive. Cincy's still seeing kind of a net migration where people are like, that is still a city where I can get the job, I can raise my family. It's got the amenities that I want. It's got, arts and sports and parks and safety and family friendliness. And it's still way more affordable than the national average. So that's why this headline is kind of what it is that home values here are expected to continue to grow faster than the national average. Let's get into it. Cincinnati home values are likely to increase at a faster rate than the national average in 2026, according to a new report from one of the largest home selling platforms. Home values in greater Cincinnati are expected to rise 1.6% next year. I actually think that's low. Like, just feeling what I'm feeling in the market, I'd be surprised if it sits at 1.6, surpassing the 1.2% growth expected nationwide. So nationwide, again, looking at national level, looking at 1.2, this is saying what? Cincinnati's going to outpace that by 33%, if my math is right. That's according to a Zillow report, Zillow economists. Zillow anticipates the housing market will see more sales and slight price growth and expects rent affordability to improve. The growth forecast comes as Cincinnati home sellers have recently been cutting listing prices this year. Now, this is true. I'm also feeling this, where for the first time in several years, Cincinnati sellers have been cutting home prices. There have been price reductions. There has been a longer days on market. That said, overall in the marketplaces, home prices are still up this year, 4, 5, 6%, depending on the neighborhood and pocket you're looking at. The average home listing in Cincinnati was discounted $20,000 off its initial posted price in October, ranking it the 15th biggest discount among the 50 largest metros nationwide. So we talked about that a little bit in the prior few weeks. And part of that is the market. Part of that is the seasonality. So we always see a dip in pricing this time of year. Really where we're at, what is it, December 18th right now? This is basically the lowest price point of the year. And as soon as, mark my words, guys, as soon as we get past the holidays here, as soon as we get past Christmas, oh, Christmas is 1 week from today. Wow. Okay. As soon as we get by Christmas and New Year's, what I typically see, our phone starts ringing, and there's a lot of people who are thinking about buying right now. They're thinking about moving right now, but they want to get through the holidays. You don't want to mess with that. A lot of people during the holidays sitting on the sidelines, but then bam, you did your New Year's resolutions, got your pre-approval letter ready to go. And then first of the year, it's go time. This is definitely a low point where we see seasonality here in the area. So through November, total home sales in Butler, Claremont, Hamilton, and Warren counties are up 2.4% from the same period a year ago, according to data from the Realtor Alliance of Greater Cincinnati. A total of 16,000. So this is the amount of homes sold, not the value. 16,371 homes have sold this year, up from 15,983 in 2024. Total sales volume, which measures the total dollar value of all homes, rose at a much faster pace. Year-to-date total sales volume hit nearly $6.2 billion at the end of November, compared with nearly $5.7 billion a year ago. I could be wrong on that. Maybe they're saying 2.4 on the increase in median price. I'm a little not sure on that. But what is that? 500 million more in actual sales volume year to date. While the median sales price has continued to climb, the local market is seeing the median number of days on market increase. In November, it rose 30% to 13 days. So yes, again, I'm seeing that as well. And it's for the same things I just said. It's seasonality. It's also market. It is the highest we've seen on days in market in a long time. So if you are a buyer right now, you do have more power than you've had in the last 7 years, 6 years, maybe. Now home prices are way more than they were in 2019, obviously. And that's the price you have to pay for not purchasing previously. I know that's a tough pill to swallow, but that's where we are. We are seeing days on market increase up to they rose 30%. So the Zillow reports forecasts 4.26 million home sales nationally next year, which is an increase of 4.3 blah 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 national. So Zillow expects mortgage rates will be unlikely to drop below 6%. We'll see. Yet the real estate listing company believes new construction for single-family homes will be at its weakest next year since 2019 due to a large inventory of homes already built and others. I think this is getting more national again, not necessarily Cincinnati, because I am seeing that, again, what we just read in the other article, you're seeing that in the South, you're seeing it in the West, you're not necessarily seeing that in the Midwest. Buyers will be driven by energy-efficient technologies such as zero-energy homes. This is just what Zillow is saying. Home batteries, EV charging stations, blah, 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 blah. So overall, what I want you guys to take out of here on this article is what's happening here in Cincinnati is kind of what has happened for several years here is our market has outpaced a lot of other places. Now, again, like I mentioned earlier in this live, we don't usually hit appreciation that goes higher. Like Austin probably, even though Austin's prices have dropped 90% of the homes, same with San Francisco and Denver and these different places, I would venture that probably their overall appreciation is still above Cincinnati's. Again, what I keep telling people is Cincinnati, stable, steady, reliable, dependent. A lot of times what I'll say is like, we're the most average city in America in all the best ways possible. Okay. You're just nobody's going to recognize us. We're just going to kind of float under the radar and do our thing. And if you're out there and you're like, That sounds great. Like, I don't want the ups and downs. I want something stable, steady, reliable, dependable. Cincinnati might be the right market for you. So, all right, next headline I want to hit. Now, this is one's a little different. We're jumping into something that happened in the commercial real estate space that just kind of caught my eye. And I've been talking about, what's happening around downtown for a while. And what was really interesting to me about this headline is there are other companies, there are other investors who are, who are bullish on Cincinnati. So it's not just local real estate agent. Sorry, I'm getting my tea ready here so I don't burn my mouth off. It's not just local residential real estate guy saying these things. Okay, that's why I wanted to hit this article. It's not just Eric Stagno, Clanyo is trying to sell you a house, which I am. I'm not gonna lie. I do want to sell you a house. Hit us up. Info's down below. Call, text. You can call. You're gonna talk to me. You're gonna email me. Happy to talk to you. Schedule a consultation. It's free. Blah 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 blah. But again, I'm trying to get the data out there for you guys. So this is really interesting to me because I want you to understand the trends. And some of the quotes in this article really stood out to me from just a national investor standpoint. So it's not just Eric Stagno telling you about how great Cincinnati is, but this was really interesting. So let's get through this. A buyer of a Cincinnati skyscraper is bullish on downtown office market, says the rebound is ahead of schedule. So last headline is that the home values in Cincy are growing faster than the national average. Here we see that the office market, okay, on the commercial side, the rebound here is ahead of schedule. So let's get into this. The new out-of-town owner of the First Financial Center in downtown Cincinnati is bullish on the local and national office market, believing, by the way, all these articles, I don't do a good enough job probably of giving credit, but this is from Brian Planaut over at the Cincinnati Business Courier. Again, this was by Sydney Asher, Business Courier, and our first one here was also Andy Medici. So thank you guys. Appreciate your work on this. Okay, so from Brian Planaut here. Louisville, so let me read that again. On the local national office market, believing the return to office trends will accelerate in the years to come. Louisville, Colorado-based Real Capital Solutions partially deviated from its national acquisition strategy in buying the First Financial Center for $59 million last month, one of the highest acquisition prices for a downtown Cincinnati office building in recent memory. The firm, using internal capital and known investors, is on a buying blitz across the country with more than $1 billion in submitted offers and $500 million deployed in primary and secondary markets, targeting office assets it sees as distressed with strong repositioning potential. Now, I want to hit that for a minute because they did something here that's abnormal for their strategy. I just want to pause and mention that. Normally, they're going after distressed markets where there's a value play, where you can get in there, you can update it, you can get new rents, then you sell it for a higher price, you add the value, yay. They're not doing that here in Cincinnati, okay? We're going to keep going on here in the article, and we'll see what it is exactly that attracted them here to this market to deviate from their strategy. But the First Financial Center is not distressed, okay? Its 92% occupancy rate is uncharacteristically strong, and its base of tenants, First Financial Group, Chemed Corp, and Dinsmore & Scholl, et cetera, is both high quality and stable. Are those words that I've mentioned tonight? High quality and stable, that is the Cincinnati market, with minimal turnover, according to Real Capital Solutions Chief Acquisitions Officer Adam Abeln. We'll go with that. It doesn't have as much value add potential as our typical office acquisition, he told the Courier. Cushman & Wakefield's Tom Powers listed the property in an exclusive offering that fetched several bids. Abeln described the process as competitive. He said the RCS offer may not have been the highest, but the former owner selected it because RCS has cash on hand and there was certainty in its ability to close. RCS, in turn, was attracted to the First Financial Center for several reasons. Number one, that widespread flight to quality among tenants seeking to upgrade their spaces, the lack of competition in the Class A office market in Cincinnati, and supply destruction downtown in the form of rampant office conversions that have taken around 1.8 million square feet of Class B and Class C space off the market in the last several years. So I want to talk about that because we've mentioned that in many headlines on the channel before. And Cincinnati has led the nation in a lot of ways in converting a lot of this office space into residential space, into residential real estate. And so this company is saying like, oh, thank you. You know, there's a lot less office space out there. And so, you know, the value is there because you guys are converting a lot of that to residential. Now, the city's thought on that has been because, you know, so much tax revenue was lost when so many people fled the office space. Their idea is like, we need the tax base brought up. So let's convert these buildings into residential. Let's make downtown more lively, more people living here, not just a ghost town after 5 p.m. where people just drive in and drive out. No, let's make it a place where people live, where it's more mixed use, and there's retail and there's amenities that are for residents. So, yeah, that's an interesting note though, that this company saw that and they're like, I like that. There's not a lot of Class A, and there's less and less of the B and C class. It makes the Class A even more valuable. So frankly, Cincinnati wasn't high up on our list. I just want to pause right there and say that, like, if I could make a new tagline for this city and maybe for my real estate channel, this might be it. That, for instance, frankly, Cincinnati wasn't high up on our list. I think I could probably pull my past clients, do a little survey, and probably get like, I don't know, 95% of them to agree with this statement if they're shopping around different markets. And it's like, frankly, Cincinnati was not high up on our list. I've talked to, I'm not offended by that, by the way, as someone who's lived here my whole life. I get that's what we are. We're not high up on people's lists. And I will say that is a huge reason why you could take advantage of it, because frankly, Cincinnati is not high up on a lot of people's lists. And that's a good reason. That's a huge reason why it's still a good value. You know, I've got some clients here who are looking to move here from Nashville, and Nashville is high up on a lot of people's lists. A lot of people from out west moved to Nashville, and it's just a completely different city. I went to college in Nashville from 99 to 2003, and went down there recently, and I'm just like, what? Like, it's changed so much in 20 years, and very, very different. Nashville high up on a lot of people's lists. They did a better job of branding, I think, than Cincinnati did. But I that one just makes me laugh. All right, I'm going to keep going. But now you've got more young people in the downtown area. So you do have that residential we're talking about. And then those tenants that were in those converted office buildings, they still want to be downtown. They're going to be looking for space too. Bellin said, you add that all into the hopper with the First Financial Center, and we got very comfortable with the market, just given the supply demand factors that are happening there. So the First Financial Center's replacement cost is also sky high. So this is another huge reason why they're like, deal, 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 deal. If you build a new project in downtown Cincinnati, you're probably looking at $600 to $700 a foot. Okay, so we're looking at these projects that we've been talking about in the banks and putting new projects down there. You're talking about $600 or $700 a foot. And he said, we're buying this building for $106 a foot. And the dude's like, you know, like, he's feeling really good about this purchase. This whole company is. They're like, dude, you can't replace that, which again only makes it more and more valuable. Like, the replacement cost is 6 to 7 times more expensive than what we're buying this thing at. So he's saying your rents are going to have to be so much higher for a new project to be developed in the market today. It's like nothing's going to be built for 5 or 6 years. We expect to start seeing more healthier growth in the downtown Cincinnati office market as a result. He's like, I mean, this is what you do, right? If you're a smart investor, you buy low, and he's buying something where there's going to be, he sees the wave of demand coming. It's already at 92% occupancy, and he's like, it's only going to get stronger. So all that said, the overriding factor in the firm's purchase decision was the historically high cap rate. So this gets into, I'm not going to get too wonky and bore all of you out of your minds who are watching this. If you're investors, you understand cap rates. But, just to kind of summarize here, the First Financial Center, the U.S. cap rates averaged around 8% for office assets. Before the COVID-19, the First Financial would have been at 7%. RCS acquired it in November for a 13% cap rate. So they got a deal, is basically what they're saying. Cap rates haven't been that high since the late 90s. That's a very compelling price, not only in this market, but in what we're doing nationally with the acquisition strategy we're implementing, where we're averaging about a 12% cap rate across all the deals so far. So they loved it. The office market, so banks backed First Financial Center deal quickly. So the office market, from a buying and selling perspective, has remained in a downturn despite the high performance of top-tier Class A office buildings around the U.S. and in downtown Cincy. Because capital markets from which buyers might secure financing needed to purchase an asset have been wary of putting debt or equity into the office sector. Basic risk aversion is one factor. The state of the economy is another. So banks have been, really hesitant here to deal on this. But he said, they view the overall situation as one of the best opportunities to buy office in the last 20 years. But Elvin noted some banks are starting to warm up to the office market again, heading into 2026, and the First Financial Center acquisition may prove an early sign of that. Surprisingly, when we brought this out to our debt lenders, all the banks got it quite quickly. So they're buying this. They're going out to get the debt, the lending on it, and every lender they talk to are like, "Yep, that works. Yep." They realized the discount we were acquiring this asset for, the weighted average lease terms of about 7.5 years, and the stickiness of the tenants. We got a pretty good debt quotes for it. Again, this guy's feeling really good. He's like, yes. So this asset wasn't as challenging as some of the other assets we're acquiring this cycle. Now I'll say, I'm an investor. I do something similar with residential single family homes. I don't play in the space of $57 million assets, but all the fundamentals of the market are the same. So let me just keep where we go here. So we got pretty good debt quotes. This asset wasn't as challenging as some of the others we were in the cycle. Sawyer Point building was extremely well received by the investment market, generating an assortment of offers from regional and national investors. We continue to see increased interest in Class A office assets, and while lenders are slowly making their way back into the market, the output bodes well for both buyers and sellers in 2026. So Timmel noted there's been a significant uptick in both downtown and suburban office sales in the Midwest over the last 2 quarters. Forward-looking investors are getting very active in our markets. Our team alone has sold 3 assets totaling over 1 million square feet since August. So why do I bring this up? Cap rate compression. I bring this up to say, it's not just the residential. If you're you might not be in the commercial real estate space. I get that. I think what I'm trying to show you is the fundamentals here in terms of the Cincinnati market. At least we're just looking at one sector here, the downtown office space market. But the overall strategy that's kind of going into play from city council, from the county commissioners, from the regional director, is make downtown really, really strong. This is a sale that happened. It's like, hey, your fundamentals are really strong. Investors nationally look at that deal and go, yep, I like what's happening there. You couple that with that's happening, more and more people are getting back to office space. And I think so. How does that translate to you as a buyer or a seller of just a single, family residential home here in the market, or as an investor? Is just, look, it's stable, it's strong, the fundamentals are there. You can feel good about this market. Now, again, it's not going to blow up. That's not what Cincinnati is. Cincinnati is not a city that blows up. I do think back in 2021 and 2022, when I know this is kind of silly, but when the Bengals went to the Super Bowl and the AFC Championship in back-to-back years, and Joe Burrow brought this new kind of swagger into the city, people were like, wait a minute, are we cool? We're Cincinnati, but are we cool? It was and people started, I honestly believe, developers, city planners, people in leadership positions, it kind of unlocked a little something about like, what could the city be, and that's there, but it's just like, it's steady and slow. Like Cincinnati overall is kind of a conservative in terms of like, I would say in the business leadership mindset, but you also have a city council and leaders who are thinking progressively and thinking like, how do we grow? How do we make the city? But all of that flies a little bit under the radar. All of that going back to this quote, which is, frankly, Cincinnati wasn't high up on our list. I just think that's just the quote. That should be the title of this video. Frankly, Cincinnati just wasn't high up on our list. But the fundamentals are strong. So, all right, a couple more headlines just to back this up a little bit more, and then I'll probably wrap it up for the evening. A few more deals that are going down. CFM International, Pegasus Airlines announced a massive LEAP 1B purchase. What is a LEAP 1B, you might ask? These are engines, and they are buying them from GE Aerospace in a joint venture. A Turkish airline has made a massive purchase. Pegasus Airlines and CFM International announced an agreement on December 18th. This just happened today. This is breaking news. Story by Nikki Kingery. For up to 300 LEAP 1B engines to power the airline's future Boeing 737-10 model fleet. The contract also includes spare engines and long-term maintenance agreement. Westchester Township-based CFM is GE Aerospace, 50-50 joint venture with French manufacturer and Safran aircraft engines. I just finished recording another video earlier today where I was talking about Westchester Township. And I'm like, hey, this is a good place to live. Why? There's jobs there. Jobs are good. Jobs are good when you're talking about buying a house and the value of that house. Well, here you go. Neither company disclosed the value of the deal, but earlier this year, Ireland-based Ryanair, in a media release, put the value of a purchase of a 20 LEAP 1B engines at around $500 million. So that puts each engine at $16.6 million. And how many are they buying? They are buying 300 of them. That's a big deal. What is that? $450 million? 16,600,000 times 300 plus all the maintenance. Oh, that's a lot of zeros. 980 million. 123. I think that's a $4.980 billion. That's nearly a $5 billion deal. Am I doing that math right? That's a big old deal. Huge deal. So we'll monitor that on those numbers. If my math is right on that, but that is a massive deal. Last month, GE Aerospace and CFM ranked in billions of dollars in sales in the Dubai Air Show. Yeah, the two companies sold 428 engines in a range of deals, including $9.1 billion investment from Emirates Airlines, one of the world's largest commercial airlines. They've landed several other recent deals. So yeah, I think my math does check out. This is going to be, if 300 engines, is going to be about $5 billion. GE Aerospace and CFM International together comprise around 75% of the commercial aircraft engine industry. Huge deal. Huge deal locally. Cincinnati's largest public companies, just to throw this back up here, Kroger's number 1, P&G number 2, GE Aerospace is climbing the charts, ladies and gentlemen. They're at number 3, and they keep landing deals like this, and they're going to be up further and further. Right behind them, Cincinnati Financial Corp, Cintas Corp, Fifth Third Bank, American Financial Group, Hillenbrand Incorporated, EW Scripps, and Chemed Corp up there in Mason. So huge deal. That's one headline I wanted to hit. This is a fun headline. Let's go on to this. This just came out today as well by Corey Schaffeld, December 18th. Skyline Chili opens a massive restaurant tap room on Fountain Square. I went to Skyline yesterday with my son as we were going over to pick up my wife from the airport, CVG, and dropped off a closing gift. By the way, huge week for Team Sztanyo. We've got we had a closing Monday, 1, 2, 3, yesterday, 4, 5. I think 5 closings this week. So helping a lot of people get close here right before Christmas, which is fun. We've got several other pendings right now. I think we're going to be up around 93-ish closed units on the year. I think right about there, almost to 100. Last year, we were around 63 or 62, maybe 64, something like that. So big year from Team Sztanyo. Thank you, everyone out there who used us, who trusted us. Really, really appreciate that. But huge jump on the year and massive growth here for the team. By the way, if you're watching this, I know some real estate agents out there are watching this. We are hiring. I'm just going to throw this out there. We are hiring. We are looking for agents to join the team to grow your business. So we, as you can tell, we're growing here. We're going to continue to grow, and we could use more quality agents on the team. So if you're out there and you're like, you know what, didn't have as big of a year as I wanted for my business. Maybe I was a solo agent, but I want to join a team. The stat that's out there is that 70% of real estate agents sold 5 or fewer homes in the last year. That's every year. 70% of agents. So I know everybody out there knows real estate agents. 70% of them sold 5 or less. They're not doing enough deals to understand really what's going on in the market. That's the honest truth. We're doing close to 100 deals this year. We know what's going on in the market. But anyway, I will say that whether you're looking to buy or sell, reach out to us. We'd love to help. If you're looking to get on Team Sztanyo or join a team, would love to chat with you about your business, see how we can grow your business. And we're looking for great people to join the team. So let's get into this. Massive Skyline Chili. They're opening a 200-seat museum restaurant on Cincinnati's Fountain Square. An 8,000 square foot location will employ approximately 100 people. And this represents Skyline's largest and most significant corporate store investment. This is crazy. I love it. I love it. Skyline Chili, they're opening a one-of-a-kind restaurant in Fountain Square in the heart of downtown. The company will launch a new corporate-owned restaurant in the former March 1st brewing space at 10 Fountain Square Plaza between Potbelly and City Bird at the eateries at Fifth Third Center. So let's take a look at this. Right here at Fountain Square. Let's get a little street level. We are talking about... Are we at Fountain Square here? Close. I think we're talking about this building. Let's kind of go around the corner here. Where am I? 6th Street. I'm a block off. Fine. Is that south? Yeah, here's Fountain Square. So Via Vitae. Let's take this off. Here's Fountain Square. They moved the ice skating rink down here this year to the new plaza over by the convention center. Get out of my way, truck. Here is Fountain Square. I'm trying to show you guys the fountain, but I believe they said in the Fifth Third building, which is right here. So Skyline Chili going in right by Graders there. I mean, this is a dream come true. I'm not going to lie. This is pretty exciting stuff. Between Potbelly and City Bird. July, March, first brands, I don't know which will be located. Skyline signed a 10-year lease. Let's go with Fifth Third Bank for 8,000 square feet of space. That includes all of March 1st tap room and a portion of what used to be Lavo's Bar. What is going on here? This is what used to be there. Okay. So all this is going away, and all this will be Skyline Chili. Amazing. This is going to be incredible. Okay, I'm so excited about this. Skyline will transform the main taproom space into a large 200-seat restaurant with customer engagement spaces that pay homage to the company's more than 70-year legacy. It's essentially a Skyline museum, restaurant, taproom, and retail store that sells branded merchandise all in one spot. There also will be a private party area that can be rented out for birthday celebrations, rehearsal dinners, corporate events, and other group outings. We're hoping to have a little bit of fun with the brand, Joel Bone, Skyline's Senior VP of Restaurant Operations, told me there's going to be some cool theme seating around the ingredients. So you're going to have what? A coney dog? You're going to be sitting on a hot dog or like a three-way or something like that is the seating. The company is using around 300 square feet of the former Levo bar space. Skyline hasn't started construction yet. The company did not say. It's hired an architect. The goal is to open in time for Red's opening day festivities on March 25th. Let's go. Dude, you get this going for opening day. This is so epic. This is epic, okay? If you're from Cincinnati, I know if you're not from here yet, you don't get it, okay? But if you are from here And you know that Skyline's making a museum downtown on Fountain Square that can host events, that can hold 200 people. Like, you're just leaning into it, Cincinnati. Lean into the brand, lean into the chili. Very exciting times. This is very, very exciting times here. I know you don't know. If you need to see it, I've done a Skyline Chili video. Okay, it's called the 5 stages of Skyline Chili addiction. And the idea is that it's inevitable. You'll get there. If you're not from here and you're watching this, I know you're like, what are you talking about? Chili on spaghetti noodles with a giant mound of cheese. Yes. Also, get the coney and get mustard and onions on the coney. It's so good. Had 2 of them yesterday. Hit the spot. Then you got to do the cracker bombs with hot sauce and the oyster crackers. I'm getting excited just thinking about it. So the company did not disclose the amount in its plans and investment space. CEO Dick Williams said this is the most significant investment made in a single corporate store in many years. Skyline has been looking to get closer to Fountain Square for some time. He said, I'm really excited about what I'm seeing happening around Fountain Square. There's certainly more housing coming online. Workers are coming back downtown. The investment just a few blocks away in the convention center means a lot more visitors. Those are all arrows trending in the right direction. All arrows are trending Skyline Chili. This is amazing. Fountain Square is the heartbeat of downtown Cincinnati, according to Williams. It's where the downtown workforce gathers for lunch, and families and friends gather for food and entertainment at night. It's also a place that serves out-of-town visitors. Yeah, this place is going to crush it, okay? This is going to crush it. This is a genius idea. This is a great way to ride the wave of the convention center, because you are going to get so many convention guests going like, I guess we have to go try Skyline Chili. And then you're hooking them in the brand, and now they're buying it via mail wherever they live across the country. Smart, Skyline. This is smart. This is smart. Williams want to be in the center of the action and hopes the new Skyline location can be a gathering point for sports fans, for travelers, and for Cincinnatians who work and live downtown. This hometown favorite will be a wonderful addition to the existing local businesses at the eateries. Yeah. This is smart. It won't feel too big. We're going to design it in a way that it services different customer segments. The entertainment space, the private party area, the bar are all going to break it up. The new location will employ about 100 people. The company will serve beer and wine. Let's go. Williams said it will likely not serve liquor. Skyline downtown will be available just about every day part, 7 days a week, which is a big change. I'm excited. I'm getting excited about this. The company has 2 corporate-owned downtown locations. Yep. We're looking at how downtown is evolving. If they continue to perform, they'll still stay open, but they're all heading down to downtown to the Fountain District. Williams said the company is not trending toward opening other large restaurant footprints in the future. This is a pretty unique opportunity. There really isn't a footprint for that in most typical Skyline locations. And given the cost of real estate now, it's probably not practical in the near term. Yeah, this is one of a kind. So they started offering different items recently. Chicken chili, which I saw yesterday. They got the spiced beer. They got the ice cream. You can get it all at Skyline. We feel like there was an opportunity for investment improvements with the brand, and we've taken care of a lot of what we wanted to do in a short term, so I would not expect us to keep up the same pace. He's like, this is it. Okay, this is a one-time thing. We're going to figure it out. But this is exciting. Skyline's known for its cheese conies, for its 3-ways. Debuted in 1949, has 136 locations across the country. Williams' business roots in the tri-state region are deep. His uncle, Tom Williams, was the North American property CEO, led the family's acquisition of Skyline, which is celebrating its 75th year in business. From an ownership team led by then Skyline CEO Kevin McDonald, beginning in 2021. Dick Williams initially got involved with Skyline as a board member, but McDonald ended up accelerating his departure, which allowed Williams to take on the Skyline role. Skyline is the area's 59th largest private company with more than 5,830 employees and a 2024 revenue of $262 million. It returned to local ownership in 2007 after being publicly traded for nearly 2 decades. It is Skyline time, people. It is Skyline time. We don't have good pictures here. We need, there you go. I guess that's the best. There it is. It's exciting. Exciting. So there's the chicken chili. That looks, that looks pretty good. But there you go. There's your oyster crackers, your hot sauce. Very, very excited. I know. I'm showing my Cincinnati stripes here, but that is exciting. Okay. One final article. I'll just hit this headline before we go. Another company is looking to double their greater Cincinnati presence. They're looking to add 539 jobs in Hebron, Kentucky. They're investing $41 million, and these are high-tech jobs. They're averaging $67,000 in annual salary. They're expanding their 520,000 square foot fulfillment center. The company is the Atlanta-based Stored is the name of the company. Look at these guys. These guys are getting after it. They're co-founders Jacob Boudreau and Sean Hendry, and they're investing here in Hebron in Northern Kentucky. I've got another client who's actually moving here, who's been looking for warehouse space in Northern Kentucky as well, moving his business here as well. So the momentum continues. The momentum continues on. I think that's what I wanted to kind of show as the highlights here. So if you're looking to relocate here, you've got strong fundamentals in the housing market. You've got businesses moving here around CVG. You've got a strong office space, fundamentals where investors around the country are like, yeah, that works. Those numbers work. We're happy with that. And maybe most importantly of all, you've got Skyline Chili building a giant restaurant in downtown Cincinnati. Things are looking up for Cincinnati, Ohio. That's what I'll say. So I'll close it out there, guys. Thanks for watching as always. Be sure to like and subscribe if you haven't already. Leave a comment below. Share this with a friend. If you're looking to move to the Cincinnati area, we want to help. Info down below, but you can call, text, email us, however you want to do it. We've got a free relocation guide as well. If you're just still trying to figure out that information, no pressure on that. It's free. That we actually have multiple guides there. There's a family kind of oriented one. There's a young professionals one. And there's one that's centered for international and trying to understand what is the market like if you're moving here internationally. And we're seeing a lot of those people move here as well. So things are looking up for Cincinnati. I hope that was helpful for you guys. I'm going to wrap it up for the night. I'm going to have to go make some food because now I'm really hungry looking at all this Skyline Chili. So let's see, it's December 18th. So may not be on here for a week or two. So just want to wish you all a very, very Merry Christmas. Hope you have a wonderful holiday with your family, with your friends, enjoying it, celebrating Christmas. What is better than to celebrate light entering the darkness? So definitely one of my favorite holidays of the year. I don't know if it's my favorite, but it's pretty great. Actually, if you took out all the consumerism, I'd love it a lot more. But hopefully you get to have an enjoyable and wonderful time. Appreciate you guys. Thank you so much for watching. We'll see you in the next one.